still the voice of Win Michaels, your favorite forest guy. And today I'm just back here to share with you technical analysis and also share with you the wave count, what I think is happening, and also when is the best time to start looking for selling opportunities on CADCHF. If you're new to this channel, I recommend that you subscribe, and also please you smash on that notification bell on this channel so you'll be getting all the information whenever I post content such as this one. All right guys, let me just walk you guys through this setup right here, and I think it's a wonderful one, and one I would really love to take some swing positions off because it has all the criteria and it fits all the setups for that kind of trade. Okay, so apart from the fact that I've also shared with you guys back in the channel what I want to do, because I shared with you guys also this trade here, this setup right here in the channel, and you guys should look to short here for some period. We could be looking at 7 weeks possibly before we could take final profit, but we could also be taking some profit along the way. So I'm going to be sharing with you also those areas which I'm going to be looking to take some profits as we develop. Okay, so as price develops, I'm going to share with you also these areas which I'm going to be looking to take profit as well along the way. Okay, so what are we seeing, guys? Far back 2015, 2016, 2017, 2018, we've seen that price was trading inside of what could as well be some sort of range bound territory here. So we had it that in 2019 COVID took price out of this zone. Okay, so we had price drop out of this zone, but overall if we're going to be looking at some crazy wave counts, we could as well look at this as a possible contraction, maybe an extreme right here, A, B, maybe a C, maybe a D, maybe some sort of contracting E right here, some sort of move then to the downside, which started right from here, and a retracement right here. So we could be looking at an ABC some sort. It's a whole possibility that we could be looking at some patterns very much complex inside of these areas here, because once price starts consolidating and going into a very small range area or trading inside of its very small range areas, we can as well be expecting that certain price developments could also develop, and certain times or most times that not, we can be seeing invalidation of structures on a more smaller time frame. So from a weekly time frame here, this was done, we had price break to downside. Okay, so that was done, and for this one here I just want to share with you what I think about what is happening now, okay, in the market. And we have an impulse correction and we have the next impulse to the upside. Okay, so possibly I think we could as well be completing this format right here. Okay, so we have a 3-wave move to the upside and this strong impulse right here. So we have this as what I would call a triangle or some sort. A lot of people might actually look at this and call it a flat pattern, but I would look at this as a contracting kind of structure. Develops to the upside, we have some sort of ABC structure right here. Okay, as you guys know, when I'm talking about structures like this or the Elliot wave concept, I point out to you guys that the best technique for analyzing the market, apart from the fact that you have to use the Elliot wave concept, is to be able to identify what you see. Okay, so first start from the left to right. What can you identify? What makes the most sense? Okay, so when is the best time to look for entries? When is the best time to look for exit? And also, what are you going to be doing when those trades start moving in your favor? Okay, so how are you going to be putting your protective stops, and how are you going to managing those positions is what makes all the difference. Okay, so also with your position sizing as well in terms of risk management, that's what you're going to be looking at as well. Okay, so looking at this one here, I see a possible 3-wave move to downside here, which I shared with you guys before. Okay, we have a 3-wave move to downside, but looking at this, okay, compared to this structure here, this looks rather abnormal. Okay, it looks rather abnormal because looking at this one here, we can as well be working out that if an ABC upside completes some sort of structure such as this one here, we could be looking at some sort of deeper retracement for the next push to the upside. Okay, that's what I'm looking at. Okay, so for price to stay inside of this zone to accumulate for some time, I think there is something up here. Okay, so what I'm seeing right here now is I see a possible ABC down, and I could label this as an A leg. Okay, so I see a possible A, B, maybe a C right here. So I could label this as a contracting triangle. Okay, it's a possibility for this to fit into a contracting triangle, because if we look at this closely on a daily time frame, here, we can as well see that we have a 5-wave move to downside. Okay, so we have a 5-wave move right here. So this is 5-wave move, and I could label this as WXY. Initially, we did take some positions off this point here at the WXY, which completed. Okay, we also took some positions off here okay, which have completed upside. So what I'm looking at here, I'm looking at a possible wave B creation. Okay, so this is going to be my wave A. If this is going to be my wave B, which means I'm going to expect that price should drop below this point up to testing 127 Fibonacci extension of this structure here. Okay, so if you're going to be working out a 127 Fibonacci extension, as you guys know, when I'm looking at extension, I mostly use my B to C leg. Okay, my B to C leg of that triangle or that structure there is where I want to take first profit. Okay, that's my second profit. Okay, as you guys know, and my very first profit is going to be at the extreme of the B leg. Okay, there are various reasons why I want to do this. Okay, the extreme of the B leg is where I want to take first profit. 127 Fibonacci extension is where I want to take my second profit, and also 161.8 Fibonacci extension is when I want to take my last profit. This has also helped me over the years to be able to take statistical targets. Okay, I don't just take random targets. I don't just aim at random areas because of what I feel, but rather I look at what the market is giving to me and what the market presents to me, and I make my assessment or I make my decision based on this concept. So over the years, I've been able to develop the skills that I can actually look at the chart and then make meaning of it. Fine, if I'm wrong with this analysis, I walked up to the next one. Okay, there's nothing wrong about that. There's nothing good about that. Okay, so but at the end of the day, you want to be taking trades around positions where your risk to reward ratio makes the most sense. So possibly a 1:3, 1:2.5, 1:2 makes the most sense for me. So taking this kind of trade over and over again, if I'm having a 70% win rate, 60% win rate, at the end of the day I could add it up and then it will still be a profitable trade over a period, say a calendar year or a trading year, say a trading months, or possibly a quarter. Okay, so I could actually do that. Okay, so looking at this one here, where are we going to put our protective stop first is what I'm going to be sharing with you first. Okay, so this is going to be my extreme right here. Okay, this is going to be my extreme here, right here. I think the best target would be to have a 10 pips plus 10 pips to this area here. So a plus 10 pips to this area will take price into this territory here. Okay, so a plus 10 pips here will mean that at the end of the day our protective stops is going to be around 0.75, maybe just 751 or 755. Okay, 7505. This is a very cool target. 7505 could be a target. Okay, so we're looking at 85 pips for a stop loss, and we're looking at profit. Okay, profit of 315 pips. So this is more of a 1:3 plus risk to reward trade. So it's a very good position to be, and it's one I love to take oftentimes. So this is going to be my swing trade. It's going to last for, at least I project it to last for about, let's look at ATR for this one. Okay, so what's the ATR on a weekly basis? What's the ATR for this one on a weekly basis? Let me look at ATR on a weekly basis is 118 pips. So I'm looking at the 118 pips. That's going to be possibly, I'm going to look at 3 weeks plus. Okay, considering the ATR. Okay, average to range. For this currency play right here. So I'll look at this over this period to take possibly 3 weeks plus, 4 weeks, 5 weeks, 6 weeks could also be in play. I'm going to be looking at this as more of an impulsive run to downside if that's going to play out. Okay, and with that, I just want to wrap up this one and also tell you guys that the best time to look for trades in the market is not when the market is moving. Okay, so you want to be positioned and then you wait for the wind to come. Okay, so you don't want to be trading against the tide. You want to stay at a corner. You want to stay at some certain points and then expect that when the wind comes, it's going to blow in your direction. You don't want to hop into the trade when the market is moving. Okay, so see you next time, and subscribe, like, and also share with friends. That's the best. Thank you, and it will also help in the creation of more videos such as this one. See you on the next one.